Alright, hi everyone. Welcome to today's pre-market live analysis session brought to you by IC Markets. Right, trust all of you have had a great weekend. Right, so before we start today's webinar, let's take a look at the disclaimer. Alright, hi morning Nick, good to see you as well. Good morning, good evening, wherever you're tuning in from. Right, yeah, definitely we'll cover the dollar index, gold, and the euro as well, along with some of the other major currency pairs, the commodities, and the indices as well. Alright, okay, so before we get things going, right, here's a disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. So take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, hi Costas. Alright, yeah, sure, definitely we can cover the euro, gold, and dollar franc as well. Yep. Right, so before we dive into charts and trading view, right, take note on the first trading day of the week, which is the 11th of November, right? It's Veterans Day in the US, so US markets are going to be closed. It's also a bank holiday for Canada as well, and for Japan, if I'm not, oh no, for France, right? So French banks are going to be closed, Canadian banks, and the US banks as well. So take note, we may have some slightly lower than usual volume and liquidity during those periods, right? And of course, looking at the economic calendar for this week, right? It's we've got US inflation data on Wednesday, 13th of November, followed by US retail sales on Friday, which is the 15th, as well as industrial production and retail sales out of China as well. Right, so here's the calendar for this week. All right, so there's quite a few things going on, right? Of course, there's got a few other things going on as well. Right, we've also got inflation expectations data out of New Zealand. That's at 2 a.m. GMT later today. Right, we've also got claimant count change out of the UK. We have a few Federal Reserve officials speaking, along with Chairman Jerome Powell as well. Right, we've also got ECB President Christine Lagarde and Bank of England Governor Andrew Bailey as well. They're all up on Thursday, 14th of November. Right, so inflation data drops on Wednesday. In inflation data for the US, specifically CPI and PPI. CPI drops on Wednesday, 13th of November at 1:30 p.m. GMT time. PPI, which is measures the level of wholesale inflation, that drops on Thursday the 14th, 1:30 p.m. And on Friday we have US retail sales as well, 1:30 p.m. GMT, Friday November 15th. But before that, in the morning at 2 a.m. GMT, we've got retail sales and industrial production figures out of China. Now, taking a slightly closer look at US inflation, specifically CPI, right? On the chart, on the left I have the chart for headline CPI, and on the right is the chart for core CPI, both on an annualized basis. We can see headline CPI has moderated significantly lower, which was as high as 3.5% in March, down all the way to 2.4%. Right, so the sixth consecutive month of slower increases for prices. It's also the lowest level since February 2021. Right, however, the forecast for September CPI came in slightly higher, right? The forecast was for 2.3%, but it didn't, it eased just down to 2.4%, right? Slightly higher than the forecast. Core CPI, on the other hand, accelerated slightly from August, right? We can see core inflation accelerating up to 3.3% in September, slightly higher than the figure of 3.2% in August. This was primarily due to the sector, which is services less energy, right? Services less energy services rose sharply, gaining 4.7%, and it's one of the categories that's closely monitored by the Federal Reserve as well. Now, looking at the forecast for October, right, we can see core CPI expecting to grow 0.3% month over month, pretty much the same figure as September's, and headline CPI is expected to grow 0.2%. And on an annualized basis, we can see headline CPI remaining unchanged at 2.4%. Right, so what's also going to be important is the core reading as well. Right, if we do see headline CPI match its forecast of 2.4%, and we also see the core reading maybe stabilize at 3.3%, right? That would probably cause the dollar to come under a little bit of selling pressure, right? So take note, if you do see inflation data for the month of October coming in line with the respective forecast, we can probably expect the dollar to sell off or come under selling pressure on Wednesday, 13th of November. Right, and then on Friday, we have US retail sales. Right, you can see here over the last 3 months, retail sales have been chugging along pretty well. Right, July's gain of, I believe this was nearly 1.4% or 1.3%. Right, was a strong month. Right, it's the highest growth in sales in 12 months. Right, and then we can see on an annualized basis, which is the chart on the right, annualized sales have also been chugging along pretty well. Right, so and for October, we can see retail sales expecting to grow 0.3%, right? In September's retail sales expanded 0.4% month over month. And for October now, we're expecting another pretty decent gain of 0.3%, right? So if we do see retail sales pick up strongly, right, that could then potentially function as a bullish catalyst for the dollar, right? And we've also got, as we inch closer to holiday shopping season in the US, right? Probably starting with Thanksgiving, Cyber Monday, Black Friday, and of course the Christmas shopping as well. We can probably expect consumer spending to remain pretty strong in the last couple of months. Right, and now moving over to China, right, we have industrial production data out on Friday, November 15th, 2 a.m. GMT time, right? So we can see on an annualized basis, China industrial production figures accelerated or rebounded quite strongly in September, growing 5.4% year over year, right? Well above the forecast of 4.6%, right? It was the fastest expansion since May, right? And October's forecast points to this rebound to extend further, right? It's expected to increase 5.5% year over year. Right, so we do get stronger industrial production data, right? That could function as a nice tailwind for commodities such as crude oil, right? So take notes, if we do see stronger than expected industrial production figures out of China, right, that could signal stronger demand for crude oil. And similarly, China retail sales as well increased by 3.2% year over year in September, right? Is the highest level since May, right? Has strongest growth since May, right? And also we can see that the forecast for October points to a figure of 3.8%. So we're expecting this rebound in China consumer spending to continue as well. So remember, if we do see stronger industrial production figures along with retail sales or consumer spending, we can probably expect crude prices to see a pretty strong tailwind. All right, okay. So with that, now let's dive over into the charts on TradingView. Right, and start the analysis with the dollar index. Then we'll move on down with some of the other major currency pairs like the euro, dollar franc. Then we touch on the commodities, gold, crude oil, the indices, and crypto as well. And of course, should you have any other requests, right, do drop them in the chat box, and I'll be more than happy to go through the analysis with you. All right, so let's start off, of course, with the dollar index here. Right, I'm on the daily time frame. Right, so we can see here, after the outcome of the U.S. presidential elections, right, we've seen a very strong demand for the U.S. dollar on Wednesday, right? Right, a lot of the Trump trades were working out very nicely, right? So Trump trades were stronger Bitcoin, right? A stronger crypto, so particularly Bitcoin, Ethereum, stronger dollar as well. U.S. Government bonds selling off, so bond yields were also rising along with the stronger dollar, right? So this is some of the Trump trades that came into effect, or rather materialized on Wednesday following the results of the election. Now, we can see here on Thursday, right, the dollar index sold off quite sharply, dropping from about 105.15 down as low as 104.19. But on Friday, we saw another strong rebound as well, right? So, however, perhaps if you look at it on the 4-hour time frame, right, if you look at the dollar index on the 4-hour time frame, we can see as it came to the close last Friday, it actually retreated from its high of 105.21 and dipped under 105. So probably as markets reopen today, right, we can probably expect the dollar index to pull back a little bit, right, pull back towards the pivot here, The pivot at 104.42 is like an overlap support, and we see it running into resistance previously here from 23rd of October till about 31st October. So the last week of October, we saw the dollar index restricted under 104.50, and then on Thursday, right, last Thursday, 7th of November, as it pulled back very sharply, it managed to stabilize around this level once more before staging a pretty decent rebound. So this creates a nice overlap level that's also accompanied by Fibonacci retracement at 23.6%. Right, so this retracement level was found starting from here, this swing low on Friday, 27th of October, going up to the swing high here on Wednesday, 6th of November. We can see the 23.6% retracement sits pretty close to the overlap support, which is the pivot. Right, so probably expecting the dollar index to sell off, to pull back a little bit, right? As you can see here, Friday's closed. We saw it pull back from its high of like 105.20 and dipping under 105. So this could probably slide lower as markets kick off today, and we can probably expect the dollar index to stabilize around the pivot, which is an overlap support, and after that rebound higher. Now looking below, the first support is almost like a nice pullback overlap level, right? We see a nice swing low taking place here on Tuesday, 5th of November, nice swing low bounce. We also see a little decent pullback taking place on Friday the 18th as well. So 103.45 is a nice support level that's maybe accompanied by Fibonacci retracement. Let's see if there's a 38% retracement as well. There might be one now that I look at it again. Let's take a look. 23 and 38, is there one? Yep, there is one, right? So we can see the 38.2% retracement aligned very well with the first support. And of course resistance, right? I see a nice swing high resistance. Right, nice swing high resistance taking place here on Thursday, 27th of June, right? This is a nice swing high resistance that's also accompanied by Fibonacci projection at 61.8%. Now this projection was found starting from here, point 1 starting on Friday, 27th of September, point 2 going up to this high here on 29th of October, and point 3 ending with this swing low here on the 5th of November. We can see that the 61.8% projection level aligns very close to the swing high resistance at 106.04, which has been identified as the first resistance here. Right, so take note, the dollar demand for the dollar has surged following the outcome of the US presidential elections, and then I see a nice overlap support at around 104.42, which has been identified as the pivot. And because we saw the dollar pull back on Friday as markets wrapped up, right, we can probably expect this downward slide to continue today. So probably expecting dollar index to pull back towards the overlap support, which is the pivot, and after that probably stage a strong rebound to continue its uptrend, with the first resistance sitting at a swing high resistance at 106.04, which is also accompanied by a Fibonacci projection at 61.8%. Now, if the if the dollar index is, if we're expecting the dollar index to pull back, right, then that means when we take a look at the euro, right, we can expect the euro to probably bounce as well, right, make a small minor rebound here, right. So you can see the pivot at 1.0680 is a nice swing low support, right. This is a very nice swing low support. Hang on a minute, where's my brush? This is a nice swing low support that has taken place here at the end of June, right, very strong support level here, right. So this is where the euro, we can see it last week on Wednesday, 6th of November, and Friday, 8th of November, we see the euro testing this level once more, the swing low support once more, and it has bounced off this level twice already. Right, so you can probably expect the euro to stage a minor rebound, right? Remember, especially if the dollar index continues to slide lower, right? After last Friday, we saw it run out of steam towards the end of the session, right? If you're expecting the dollar index to slide lower, then we can probably expect the euro to stage a minor rebound as well, right? And that where the first resistance comes in is at this little pullback level here on Thursday, 7th of November, right? We can see the euro running the resistance at around 1.0810, right, roughly around here. Yeah, about 1.0820 running the resistance here. which is, and this resistance level is also accompanied by a Fibonacci retracement at 50%, right? So this retracement was found starting from this swing high on the 6th of November, going down to the low on the same day itself, right? We can see the 50% retracement sitting pretty close to this pullback level at 1.0802. Now, for the first support at 1.0615, this is another nice swing low support that has taken place here in mid-April, right? 16 April, a very nice swing low support taking place here as well. So that's how we've identified the first support. Right, pivot is also a swing low at 1.0677, right? And we have another swing low below that as well, right? So with dollar index expected to pull back, we can probably expect the euro to stage a pretty decent rebound here, with the first resistance coming in at around the 50% Fibonacci retracement. Right, and let's see, we've also had all right, dollar franc, right? Let's take a look at dollar franc, then we'll move on over to gold. Dollar franc, there we go, right? And also, of course, right, if if there are any other requests, please do drop them in the chat box early so we can go through the analysis together, right? Okay, so looking at dollar franc, right, you see, of course, the demand for dollar pick surge on Wednesday, causing dollar franc to break above 0.8750, right? So well, it broke above 0.87 first before breaking higher above to 0.8750. Now, if we expect dollar index to pull back, then we can probably also expect dollar franc to pull back as well. So I see a nice pullback level, almost like an overlap support level at 0.8698. You can see previously this level functioned as resistance here from 28th of October till the 1st of November, and then last Friday we see it bouncing off this level as well, creating a pretty decent overlap level at 0.8698, which has been identified as the pivot. So we can expect dollar franc to pull back towards this overlap support level before bouncing off it to climb higher. Now, resistance comes in at this level here, right? It's a pretty decent pullback resistance here, right? It's not the most cleanest level, right? But you can see a little pullback taking place here on the 25th of July, and it's also a level that's accompanied by a Fibonacci projection at 61.8%. Now, this projection was found starting from here, 0.1 on 30th of September, going up to 0.2, which is on 1st of November, and ending at 0.3, which is at here, 5th of November. You can see the 61.8% projection level aligning very well with the pullback resistance at 0.8808. And in addition to that, we've also got a 50% Fibonacci retracement as well. So we've got a 50% retracement and a 61.8% projection, right, highlighting a strong Fibonacci confluence again, right? So once again, 50% Fibonacci retracement, 61.8% Fibonacci projection, highlighting a Fibonacci confluence area, which is where the first resistance sits. Right, and in terms of support, we can see here dollar franc stabilizing around 0.8632 last week, well, 2 weeks ago, right, on Thursday, 31st of October, all the way till Wednesday, 6th of November, right? And this little support level is also accompanied by Fibonacci retracement at 38.2%. Right, hi Nick. All right, really good question. Right now that the US election is over, do you think buyers will be moving away from gold as a safe haven? Right, I think when we look at gold now, right, after this we'll come take a look at gold. Right, you can see here we've seen it pull back quite sharply, right, retreat away from its intraday all-time high, right? The latest intraday all-time high for spot gold was formed on Thursday, 31st of October, and that was at around, let me see, what's the absolute level? Right, it's at $2,790.10 per ounce, right? So this was the intraday high that was formed on Thursday, 31st of October. And you're right, I think with the elections out of the way, uncertainty has been removed. A certain level of certainty has been removed from markets, right? We can probably expect a lot of traders and institutions who have been buying gold probably selling it as well, probably to locking in some profits, right? So they might be offloading some of their current holdings. So yes, I think in the near term, probably we can expect gold prices to pull back, right? And where I see a nice support level is at $2,604.82. This is like a nice pullback support level that has taken place on Wednesday, 9th of October, right? So yes, I think gold could uh, continue to slide lower. I think we can expect prices to come off a bit, but I think generally they're going to remain elevated as well, right? So take note, gold, despite I expect it to ease off, but I think it's still going to be remain elevated as well, because we look at it on a weekly time frame, right? We can see that this is a very strong bullish uptrend, of course, and I'll be looking to see as well if, like this trend line here, I see a very nice ascending trend line on the weekly time frame, right? So this trend line is going to be pretty key as well, right? If this trend line gets broken, right, and especially if it breaks underneath the pivot as well, right, then I think of course we can probably expect further downside action for gold, right? So take note, this on daily time frame here, right? So very nice ascending trend line that's been in place since Tuesday, 13th of February. So let me just adjust the timeline on the daily time frame here. Right, so pretty decent ascending trend line that's been in place since mid-February, and spot gold has bounced off this trend line several times, right? 27th of June, 26th of July, and in early August as well. And we can see here at this point it intersects nicely with the pivot, which is a pullback support level at 2,604. So this is going to be a strong support level, and at the same time we also see the green Ichimoku cloud around this level as well. So we see the intersection of the ascending trend line, the pivot, which is a pullback support, and the green Ichimoku cloud highlighting a strong support zone here. Now of course, if this support zone gets taken out, then definitely I think we can expect to see more sellers for gold come into the market and probably drive prices lower, right? But for now, I reckon gold is going to slide lower in the near term, but I do see a strong support level at the pivot at $2,604 per ounce, and if we can stabilize around here, it probably helps us identify a decent entry for potential bounce as well. So take note, if we do see gold prices stabilize at around the pivot, right, we have the intersection of a pullback support, the ascending trend line, and the green Ichimoku cloud highlighting a strong support zone. If prices does indeed stabilize around this level here or this zone, it helps us identify a decent opportunity for potential bullish bounce. Resistance, of course, is going to be the intraday all-time high that was formed on Thursday, 31st of October. That's first resistance. It's nice swing high resistance. And in terms of support, right little below at $2,531 per ounce, there's another nice pullback support level that's accompanied by a Fibonacci retracement at 23.6%. Yeah, so this retracement was found by starting from this swing low, 6th of October, and of course going up to the intraday high of Thursday, the 31st. Alright, hi Costas. Alright, yeah, sure, Nick. Yes, thanks for the reminder as well, right? Everyone, please remember to hit this like button as well. And right, Costas has a question as well. What's the what can we expect for the rest of the year, right? And like now we're already in mid-November, so we've got just 6 more weeks, just 5 or 6 more weeks left, and we've also got one final FOMC meeting coming up in mid-December, right? That's the final one of the final FOMC meeting, and that's about 4 weeks away, right? So what's I would say keep a close eye on jobs data as well, right? US jobs data, right? After seeing non-farm payrolls increase on September, right? We saw a strong rebound in non-farm payrolls in September, right? Then we saw October's data, which was released what is it on which November was it? Which day was it? 1st November, right? I think it was, yeah. It was 1st November. We had non-farm payrolls 2 Fridays ago, and that showed job growth falling off quite significantly once more. So to keep a closer eye on jobs as well, right? Because if if the traders and institutions get spooked by weaker job numbers over the next couple of months, right, I think we can expect some of these strong moves that we've seen in equity markets to come off and pull back as well, right? Remember, the US consumer, right, makes up about 65% of total GDP. And if we do see weaker jobs numbers coming in over the next few months, right, that can have a huge impact on consumer spending eventually, right? So take note of that. I would say keep a close eye on the level or the rate of jobs growth as indicated by non-farm payroll, non-farm payrolls, the ADP employment report, and also take a close look at initial claims as well. Initial claims are unemployment benefits, right? And if you see this figure continuing to edge higher, right, it also points to some weakness in the US labor market, right? So take note of that. I would say keep a close eye on labor market data, and that will give us an idea of how we can expect uh, uh, the rest of the year, the next few months to play out. Okay, so these are the key levels for gold here. Right, these are the key levels for gold. Swing high resistance at the intraday all-time high. That's at $2,790.10. Pivot level is at $2,604. It's a pullback support level intersecting with an ascending trend line, and the Ichimoku cloud highlighting a potential place where a potential zone where spot gold could stabilize and make a nice rebound. And of course, first support is a pullback level at $2,531, which is accompanied by 23.6% Fibonacci retracement. Right, okay, so these are the key levels for gold. Let's move on over to crude oil. Right, XTI USD is the instrument that tracks WTI futures, and we can see it's been pretty choppy, right? Crude prices have seen significant higher volatility over the last few months, right? We can see it making a nice swing high resistance here in mid-April at around $88. Another nice swing low taking place here at the beginning of June. It's around $72, rebounding higher as well by the first week of July, then running into resistance here at around $85 per barrel, making a nice swing high resistance here. And you can see, right, we can identify swing lows and swing highs very easily, which highlights the ongoing volatility for this instrument here, right? So you can see XCI USD has been making pretty wild swings, and the swings have been large as well, right? If you just take a look at the most recent ones, right, this drop here, right, from beginning of October around $77.80. We can see crude prices have dropped nearly 14% in a matter of 2 to 3 weeks, right? Very strong swing high, and we've seen strong rebounds as well, right, with the recent one here in well, now not so recent, right, in end of September, crude prices stabilizing around $68 per barrel, and then rebounding very strongly, rebounding nearly 16% to hit almost $79 per barrel. Right? As you can see, there's fluctuations, the frequent fluctuations, and the moves have been large as well. Right, moves to the upside and to the downside have been pretty large, easily 10 to 12%, or in some cases here, of course, as high as 16% moves in a matter of a couple of weeks. Right, so take note, crude prices are facing extreme volatility, and after running into resistance last week at around $72.63, right, this is a overlap resistance level, right? We see a nice swing low support taking place here on 3rd of June, another swing low support taking place on 5th of August, and then a third one on the 21st, and then we can see crude prices running the resistance here at the end of September, and also at the end of October and early November, right? So this creates a very decent overlap level. And right, this is an overlap resistance that has been identified as the first resistance at $72.63 per barrel. Looking slightly below, right, there's a nice multi-swing low support taking place here, right, the first swing low taking place at the end of September, and the second swing low taking place at the end of October, right? So this creates a nice multi-swing low support level at $67.74, which has been identified as the pivot here. Right, so we can probably expect XTI USD to stabilize around this level this week, right? So for example, if you have been shorting crude oil as of last Friday, or perhaps if you're thinking of shorting crude oil as markets open this week, right? Identifying your take profit target at around this pivot would be a suitable area to do so, right? It's a strong multi-swing low support that has been in place since the end of September. And slightly below, I see another multi-swing low support level at $65.55, right? We see a nice swing low taking place here in mid-March, another swing low taking place here in early May, and of course the third swing low taking place here in mid-September, right? So very strong support level at $65.55. Right, so take note, right, with crude prices selling off quite sharply last Friday, and if this downside action accelerates this week, right, you can identify your take profit target at around the pivot, which is around $67.80. There's a nice multi-swing low support level here. Right, okay, let's move on over to the indices. Right, so of course we can see, right, we've seen most of the indices, US indices, US 30, US 500, and the DAX as well, right? DE40 is the instrument that tracks the DAX. We've all seen them rebound very strongly following the outcome of the US elections, right? More so for, of course, for the US markets, right? So previously for the Dow, right, US 30 is the instrument that tracks the Dow futures, right? Previously we can see swing high resistance, right, that was formed here in the third week of October, right? This was a strong swing high resistance close to the intraday all-time high at that point, and we saw a nice bullish breakout take place through this level last Wednesday, right? And it's reaching and it's continued to climb higher, and I see a resistance level identified by Fibonacci confluence, which is the extension at 161% and the projection at 78.6%. Now, with US 30, right, trading close to its intraday high, right? The intraday all-time high for US 30 was formed last Friday, and that's at 44,180, right? This is the latest intraday high that was formed last Friday, right? So in such a scenario, right, we're going to be relying on Fibonacci tools such as Fibonacci projection and Fibonacci extensions to help us identify potential resistance barriers. So the first potential resistance barrier, has been found by a Fibonacci extension and a projection. The extension level was found by running a retracement from here, this high on the 21st of October, down to the low here on the 4th of November. We can see the 161% extension sitting at 44,394, and then we use the Fibonacci projection starting from here, first point 11th of September, second point going up to 21st of October, and the third point ending here on Friday 1st of November. And we can see the 78.6% projection sitting pretty close to the extension at 161%. So this creates identifies a Fibonacci confluence area, which we have identified as the pivot, and that's at around 44,394. We've also used the 100% projection level to help us identify the next potential resistance barrier, right? That's at 45,011, right? So this is how we've identified potential resistance barriers based on a combination of Fibonacci projections and Fibonacci extensions, right? So we can see here the intraday high being formed at 44,180 last Friday. So should we see US equity markets push higher, right? Remember, take note as well, today 11th of November is Veterans Day as well in the US, so I believe the stock market is going to be closed as well. Futures will be open, but the stock markets should be closed today, so probably we can expect some quiet trading for US futures, equity futures on Monday, and then we can probably expect things to pick up on Tuesday, right? So with that, right, the resistance has been identified at the pivot, right? The pivot level is actually a Fibonacci resistance area identified by the extension at 161% and 78.6% projection. So I'm expecting US 30 to probably stall around this level here, right? We can already see last Friday it came pretty close to this level before running out of steam. So we can probably expect a nice pullback towards the support level here. So should we see US 30 hit the pivot, it's quite likely going to stall around this level here and make a pullback towards the first support at 43,339, which is the previous swing high resistance here. So first support is a nice pullback support level. Right, hi Keda. Keda has a request for Euro Pound as well. Right, great. Yep, we'll cover Euro Pound once we're done with the indices. Right now, looking at the 40, right, very strong rebound on Thursday and Friday, right, for the 40, right, this is the instrument that tracks the DAX futures, right, and we can see the latest intraday high for the DAX being formed on Thursday, 17th of October at around 19,681, right? So with equity markets rebounding strongly, right, so we're expecting the 40 to probably continue as well, right? A nice rebound on Friday, and should we see the 40 continue to rise higher, I think this is where you can run into resistance, right, at 19,670. The pivot level is a swing high resistance for the DAX, right, and this is where I think you could probably run out of steam and make a pullback down towards this first support at 19,084. Right, this nice pullback support level that's accompanied by Fibonacci retracement at 23.6%. And not only that, we also can see that the green Ichimoku cloud sits slightly below the 23.6%, right, so highlighting another strong resistance zone. So we have a pullback support level at 19,084, we have a Fibonacci retracement at 23.6%, and we have the Ichimoku cloud as well, all three elements identifying a strong support zone, right? And of course the next resistance beyond the swing high that has taken place at the intraday high on Thursday, 17th of October, we have used the Fibonacci extension at 161% to identify the next resistance barrier. So this extension level was found by starting a retracement from here, 17th of October, going down to the low here, which is the absolute low. Let me see. Okay, the absolute low is here on 6th of November, right? And we can see that the 161% extension is at 20,101. So that's how we've identified the first resistance for the 40. Right, so similar to US 30 as well, right, expecting it to run into resistance at around its own pivot and make a pullback towards the first support. Now US 500, let's take a look at that as well. Right, we can see the US 500 also trading very close or hitting its Fibonacci confluence area last Friday. And we can see this is another confluence area that's identified by Fibonacci extension at 161% and a Fibonacci projection at 61.8%. Right, so once again, projection was found starting from here, 0.1, 6th of September, going up to 0.2, 17th of October, and ending at 0.3 on the 4th of November. Right, so we can see the 61.8% projection and the 78.6% projection level sitting respectively at the pivot and the first resistance. Extension at 161 was found by running a retracement from here, of course, 17th of November down to the low on 4th of November. Right, perhaps, right, this is a Fibonacci confluence area which could act as a barrier for US 500. Right, remember when US markets close on Monday for Veterans Day, we can probably expect this instrument as well to pull back away from the pivot and slide slightly lower towards the first support here. Right, so these are the key levels for US 500, and let's now move on over to Euro Pound, and then we'll cover the crypto as well. Let's go down to Euro Pound. Right, the Euro has come under strong selling pressures, right, versus of course the US dollar and also against the British pound as well. As you can see here, since 31st of October, it has dropped, I would say, almost 1.7%, right, losing almost 150 pips in the process. A very strong move for Euro Pound since the beginning of November, right? And previously, this level here at 0.8304 was a strong support level, right, that had been in place, right? This is a strong support level that had been in place since mid-October, right? This is a strong support level here, and it finally got taken out last Friday. So we are looking at a potential bearish breakout for the euro pound, right? So take note, should markets reopen today, right? As markets reopen today and we see this uh, downside accelerate, right, we can probably see this breakout continue, right, or this breakout materialize, and see the euro pound slide down towards the first support. So pivot here, right, we saw a bearish breakout takes place last Friday through the pivot level at 83.04, and we can probably expect this downside action to continue today as well, right? And in terms of support, right, the first support comes in at 82.53, right? If we zoom out, this is a nice multi-swing low support, first of which taking place in March of 2022, second in April of 2022, and we can also see that this multi-swing low support is accompanied by a Fibonacci extension at 127%. To find this extension level, we ran a resistance from here, we ran a retracement from 18th of October, right, going up to this swing high here on the 31st of October. We can see the extension at 127% aligning very well with the multi-swing low support. And resistance, of course, right, I see a pretty decent pullback resistance level taking place here on 22nd of October till the 28th, and that's at 83.46. So take note, we saw a bearish breakout materialize for the euro pound last Friday, and it's quite likely we can see this downside breakout accelerate further as markets reopen today. Right, now let's move on over to crypto as well, right? Let's start with Bitcoin, right? Of course, we can see here, right, crypto coming into favor following the outcome of the US elections, right? And it was trading, it ran into resistance previously. Before elections, it ran into resistance at around $73,000 and $73,176. This was a significant swing high resistance, the first of which took place in March of this year, right? Mid-March, first swing high resistance here. We can probably argue it ran into resistance here in early April, and of course very clearly running the resistance here right at the end of October, right? And this was a multi-swing high resistance level that finally got taken out last Thursday, right? So this level now can potentially function as a pivot, right? As a support level here is a nice potential pullback support level, which has been identified as the pivot at 73,176. So you can see here over the weekend, right, Bitcoin has stalled at around $77,300, right, and probably could slide lower, right? Could probably pull back, ease down towards the pivot here, which has been identified as the pullback support level, right? I believe is there a 23%? There might be. Let me take a look. Okay, no, there's no 23%. That's fine, but I do see the 38.2% retracement aligned very well with the swing low that has taken place here on Tuesday, 5th of November. Right, strong swing low support here at 67,794, which has been identified as the first resistance. Now, in terms of it has been identified as the first support. Now, should we see Bitcoin pull back towards the pivot here, right? The resistance has been identified, has been at the Fibonacci extension at 161%. Remember, Bitcoin has made its latest intraday high, and that was on Friday, 8th of November at $77,304, right? So the first resistance has been identified by an extension level sitting at 161%, which is at 77,840. Right, and then let's take a look at actually before that, right, I also see a very nice let's see, where would I, pretty good ascending trend line as well. Not bad, pretty decent ascending trend line for Bitcoin as well here. Right, now let's move on over to Ethereum. Now you can see a slight disconnect between Bitcoin and Ethereum over the weekend. We see Ethereum continuing to power higher, while Bitcoin has sort of stalled close to its intraday all-time high, right? Some disconnect between these two major coins here, right? So with Bitcoin rising strongly over the weekend, right, I see a pretty decent resistance at 3,386. This is like an overlap resistance, That's also accompanied by Fibonacci retracement at 61.8%. So this zone here is a strong potential resistance zone or barrier, and higher up the first resistance has been identified at 3,889. It's a nice swing high resistance, a big swing high resistance taking place at the end of May, right? See, very nice big swing high resistance here taking place in mid-May, and of course a nice overlap level, right, which is the pivot overlap resistance, which is the pivot support here in mid-July, and then resistance here at the end of July, creating a nice overlap level. And in terms of support, of course, this level here, 2,863, previously was a pullback resistance level, right? We see it previously functioning as strong support since 19th of April till 3rd of August before gapping lower, right? Not only has this gap been filled, right? The gap has been filled, but we see prices continue to steam higher as well, right? So that's how the first support has been identified at 2,863 is a pullback support level here. Right, before we continue, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue with a few more analysis as well. Alright guys, I've launched a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's session, as well as smashing the like button on YouTube as well. And of course, should you have any other requests, do drop them in the chat box, right? We still got time. I'll be more than happy to go through the analysis with you. Right, just keep the poll running for a little bit longer. Alright, great. I think that's most of you who have voted. Alright, truly appreciate it. Thanks so much. Alright, let's just now continue. Alright, great. Okay, let's see. Right, we've covered crypto, we've covered the indices, commodities such as gold and crude oil. We've covered the dollar index, the euro, dollar franc. Let's take a look at Aussie and Kiwi as well, right? Let's wrap things up by looking at Aussie and Kiwi, and of course any other instruments that you would like to see as well. Right, so similarly for the Aussie, right, we see it stabilize at around 65.58 cents, right? Strong support level, right? That's been in place since end of October. Of course, we see this wick here on Wednesday, 6th of November, dropping as low as 65.12, but generally we can see that this level at 65.58 has functioned as a pretty strong support level, which has been identified as the pivot, right? So if you're expecting dollar index to pull back slightly, remember last Friday, if you look at the close, right, you see the dollar index coming off its high at 105.20, dipping under 105, and probably we can expect it to slide lower as markets reopen today. So that would probably mean we can expect the Aussie to rebound higher as well, right? To make a minor rebound, right, off the pivot level here. So this is a support level at 65.58, which is also accompanied by a Fibonacci extension at 127%. So we found this extension level by running a retracement from here, 11th of September, going up to the swing high here on the 30th of September. We can see the extension level sitting pretty close to the pivot, right? And slightly below, there's a major swing low taking place at 64.88 that took place at the beginning of August. But of course, right, we can see this wick here dropping as low as 63.49. But generally, we can see that this level here is a strong swing low support at around 64.88, right? So around 65 cents, very strong swing low support level. Now, in terms of resistance, right, there's a nice pullback resistance here taking place here on Thursday, 7th of November. Right, you can see the Aussie rebounded strongly on Thursday. It ran into resistance at around 66.80, which is where the 38.2% Fibonacci retracement sits. Now, this retracement was found starting from here, swing high on the 30th of September, going down to the low of 6th November. You can see the 38.2% retracement aligned very well with this pullback level here. Right, so this is for the Aussie. Let's take a look at dollar yen. Right, we've seen the dollar yen pull back as well on Thursday and Friday, right after hitting a high at around 154.70. Right, this is like an overlap resistance here. Right, previously this level functioned as a nice pullback support on 4th of June, then resistance here on 29th of July, and resistance once more last Wednesday and Thursday. So this is a nice overlap resistance level here, which has been identified as the first resistance. Now, can we run a Fibonacci retracement? Let's try something out. Let's try a retracement from here. This high on 3rd of July, going down to this low on the 16th of September. Let's take a look at the 61 and 78.6% retracement levels. Right, 61 has already been cleared. 78.6% sits at around 157. Right, so we don't need any Fibonacci retracements at the present moment. And right, so first resistance is this overlap level at 154.70. The pivot is actually a nice pullback support level, right? We can see as dollar yen was rising sharply at the end of October, it stabilized at around 151.54 from 24th of October till the 6th of November. So this is a nice support level here that's accompanied by Fibonacci retracement at 23.6%. This retracement was found starting from this swing low on 16th of September, going up to the high of, which is the absolute high of last Thursday. We can see 33.6% and 38.2% aligning very well with the pivot and the first support respectively. First support is a nice overlap support, right? We see it running into resistance first, nice swing high resistance here in mid-August, and then stabilizing here in mid-October, creating a nice overlap level at 149.39. Right, so once again, right, if you're expecting dollar index to pull back, we can definitely expect dollar yen to fall as well, and where it could stabilize is at this pivot level here, a pullback support level at 151.54, which is accompanied by Fibonacci retracement at 23.6%. Right, okay, let's see anything else. Right, okay, if there's no further request, then we'll just wrap things up with the taking a quick look at the calendar once again. Right, we've got quite a few things going on. Right, we also have a couple of Federal Reserve officials. Right, Governor Waller and President Harker as well speaking on Tuesday, 12th of November. We also have Chairman Jerome Powell taking the stage on Thursday, 14th November. Along with ECB President Christine Lagarde and Bank of England Governor Andrew Bailey. They're all speaking at different events. Take note, they're not speaking at the same event. Each of these central bank chiefs, they're speaking at their own respective events, and it's quite likely we can expect to see higher volatility for the respective currencies during each event. Right, and along with that, right, we've also got inflation expectations data out of New Zealand today, 2 a.m. GMT time. We have UK claimant count change and average earnings coming out on Tuesday, 12th of November. Of course, we have CPI data coming up on Wednesday, 13th of November, 1:30 p.m. US CPI. We've also got PPI data on Thursday, and of course, we've got retail sales for the US and GDP data for the UK, along with industrial production and sales figures for China. You're looking at US inflation, right? We can see the core reading accelerate slightly in September from 3.2 to 3.3% year over year, right? We see the forecast for October showing headline CPI remaining unchanged at 2.4%. So in general, if we see inflation data, whether both headline CPI and core CPI coming in line with their respective forecasts, then we can probably expect the dollar to come under a little bit of pressure, right? So if we see inflation matching its respective forecast, or perhaps even coming in lower than the forecast, right, then we can expect the dollar to come under pressure. Right, looking at retail sales, that's out on Friday, 15 November. Right, retail sales have been relatively strong over the last 3 months, and as we head into the tail end of the year, right, with Black Friday coming up, Thanksgiving sales, and of course the Christmas holiday season about to kick off, right? We can expect consumer spending to be pretty strong over the last 2 months of 2024. And finally, China will release its industrial production figures and retail sales uh, for the month of October. Right, we can see industrial production activity rebounding very strongly in September, rising as high as 5.4% year over year. And the forecast for October points to another increase as well at 5.5%. Right, and retail sales as well, uh, edging higher, moving higher to 3.2% in September, and we're seeing another strong growth for the month of October as well. So we do see strong data out of China, right? On Friday, this could function as a potential strong tailwind for crude prices, right? Especially right if industrial production figures continue to show faster expansion, right? We can definitely expect it to provide a nice lift for crude oil prices. All right, okay, and with that, let's just wrap things up on the chart. Remember dollar index here. These are the key support and resistance levels. Pivot is an overlap level at 104.42. Right on Friday, right as markets closed, we saw the dollar index ease back, and it could probably slide lower towards the pivot level here in the first half of the week, or the first couple of days before continuing the rebound. And take note, it's Veterans Day in the US as well, right? It's Veterans Day in the US. Let me see what are the other holidays that are coming up as well. French banks are closed along with the Canadian banks. Yes, let me bring this up. Right, there we go. Right, so we've got French banks are closed as well. Today, this is for Armistice Day. We've also got, of course, Veterans Day in the US, right? So it's also a bank holiday in the US, and it's a bank holiday in Canada as well, in observance of Remembrance Day. So take note, right? For the US trading hours, right? You can expect probably much lower liquidity, much lower trading volume, as not only US markets are closed, right? Canadian markets are closed as well for their respective bank holidays, and also French banks are going to be closed as well. So, right, maybe slightly lower trading volume and activity on Monday, 11th of November, and we can expect things to pick up on Tuesday onwards. All right, that's all I've got for all of you guys today, right? And once again, thanks for tuning in to IC Markets Pre-Market Live Analysis. Do look out for all upcoming webinars brought to you by IC Markets for the rest of this week, right? We've got a combination of education topics, live analysis in English as well as in Thai and Bahasa as well. All right, that's all I've got for all of you today, right? All right, wish you all the best in the trading journey. Have a great trading week, and catch you all in the next webinar. All right, thanks everyone. All right, thanks everyone, and we'll catch you at the next webinar. Right.